And let's now turn our focus to the bloodbath at the Indian markets and delve deeper into that. The Indian markets tumbled as the election turned out to be much tighter than forecast. How did the day pan out then for the Indian stocks? Our next report telling you more.
Benchmark stock indices closed out Tuesday with over 5% losses after rallying to record highs in the previous session. The blue-chip Sensex index crashed to end Tuesday nearly 4,000 points down. The index opened deep in the red, down over 2,000 points, but tumbled over 6,000 points at one point during the day. Both the indices marked the biggest single-day fall since the onset of the COVID-19 pandemic. The sell-off in Indian stocks weighed on the broader Asian market. The 10 biggest losers on the MSCI Asia Pacific Index are all from India. A slim victory for the Modi-led coalition raises questions on the new government's ability to push through reforms. This is likely to weigh on the country's assets further and also deter foreign investors who are already contending with pricey valuations. The rupee weakened by the most in 10 months against the dollar, and the yield on the 10-year bond rose as high as 11 basis points to 7.06%, the biggest jump since October. Avnish Jain, head of fixed income at Canara Robeco Asset Management, said if the government is weak even if the NDA forms it, then they won't have the full ability to do reforms. He added it could lead to a broader fiscal push and some populism in the budget. The Nifty's tumble brought the gauge closer to hitting its first circuit limit since COVID-era crash in March 2020. The sell-off in Indian stocks has echoes from the 2004 elections when the BJP's unexpected defeat triggered a market crash. Trading was suspended twice when the S&P BSE Sensex fell more than the 10% limit, the first time in the exchange's history. Nonetheless, some investors are banking on continuity.
At this point in time, when we're seeing the election results, it is clear that, while it may not be a very strong majority for the NDA, there will be a majority for the NDA. The NDA is set to return to power. So the policy continuity which the markets were expecting and in fact aspiring for is something that will be coming through. So that is the first thing that will give calm and will give, sort of that aspiration to the market that yes, there is going to be policy continuity. We are going to start seeing the similar sectors getting the boost that we wanted to see, and that's something that's going to help in the market recovery. So definitely we're going to start seeing that sentiment go back up again as soon as there's a little bit more clarity on, okay, now this is the final look of the government formation.
Analysts say the government's infrastructure and manufacture-led drive will be boosted. Dong Chen, Chief Asia Strategist at Bong Pictet, said, "I still think the policy direction of Modi will likely stay, which should support India's economy in the longer term." However, with India's stock market volatility indicator hitting a 52-week high, analysts predict the current volatility to continue. Bureau Report, WION World is One.
To stay up to speed with the latest news, download the WION app and subscribe to our YouTube channel.